All right, ladies and gentlemen, it is Tuesday, November 14th, 2023. Let's get into the markets and see where things have gone today. And if you weren't paying any attention, the markets took off on the session today and took off in a big way, up 2% on SPY for the day. So a massive gap up on the daily. I mean, you've still had the weekly that has been pointing up for multiple sessions now. So, you could feel it coming with the CPI there. I didn't expect this big of a gap up, but gapped and ran on the session. If we take a look at the daily chart here, you can see we were right at this downtrend line that we've been in dating back to July, and bam, gapped up and never looked back. I mean, it finished a little bit off the highs of the day, but still opened up and then still ran higher on the session. MACD continuing to increase and RSI continuing to run higher, but now finally touching a little bit of this overbought territory. We are above the 3 ATR substantially here. So you would expect that maybe a little pullback is necessary, but we had thought about that, for the last 4 or 5 sessions, and we've gotten nothing but continued up moves. The chance of the Fed having another rate hike went to basically zero today. So is the Fed done? Maybe. And on that news, markets ran higher. Still doesn't mean we're anywhere near the 2% inflation target from the Fed or the employment numbers from the Fed. We are nowhere near that. So I think just a lot of pent-up euphoria by traders out there today, and some definite short covering for the last week or so. But I still think getting long here is a pretty sketchy thing, although Santa rally could be around the corner. I would like to see a pullback to the 21 and then the Santa rally into the end of the year, and then everything goes to hell in a handbasket in January when a recession hits or something like that. But anyway, there's SPY. The Qs, we look at the Qs, pretty much a similar story on the day. Gapped and ran well above the 3 ATR, RSI getting over bought now, but these look exactly the same on the daily and the weekly. The big winner on the day was IWM. If you were short in here, you got cooked today because this was not up 1%, 2%, 3%, wasn't even up 4%. This was up 5.5% today on IWM. So a massive gap up and move, skipping over the 50, the 2 ATR, the Bollinger Bands, all the way to the 3 ATR line. Big move, well off the bottom. So a 5.5% move, I should say. Today, MACD, big turnaround. RSI, big turnaround, moving higher. The weekly's been looking good for a couple of weeks, but man, you got a huge move on the small cap stocks on the session today. The number of stocks above their 50-day moving average in the S&P jumped from where it had been around 46% or so, all the way up to 66%. So you now have 66% of all of the S&P 500 stocks are now above their 50-day moving average. Typically, when we've gotten up here, somewhere in the neighborhood of 90% or so, we've had some pretty good sell-offs. So we'll see what happens. Last time we were there was on roughly around August or July 24th. And where were we on SPY on July 24th? Okay, well, we were right here, the exact top for the most part. And since that point here at 459, all the way down here, so almost a 10% drop. So the last time we hit 90, 10% move down on the S&P 500. So we'll keep an eye on that. Put call ratio continues to drop. Let's take a look at this chart that we keep on the 10-day moving average. It just continues to fall. The more this falls, the higher the market goes. You're now in a pretty good downside move on this. So it's very, very, very bullish for the markets here to continue this run. If this continues to drop, and again, this is what we're watching, is the 10-day moving average on the put call ratio. The more this drops, the higher the market will continue to go from here. So a pretty good turnaround as we move forward. VIX dropped to 14, which wasn't really a big drop. We did not see a lot of volatility come out on the VIX. So not a big drop on the VIX. I thought a day like today, 12, 13 would be more in the offing, but no, 14. Taking a look at the US dollar on the day, just absolutely getting smoked on the session. Gap down, stayed down. So the dollar finally getting that drop that we were looking for. It's going to be great for our Forex positions. We'll talk about that shortly as well. But big drop in the US dollar, very healthy for Forex positions, the markets, everything to see the market dropping. We also had a pretty good down day continuing in the 10-year, dropping all the way now from its high up here of almost 5% down to 4.41. So a pretty good drop here on TNX. And then you've got TLT on the same note, continuing to gap up and move higher. So this TLT, as we pointed out for a couple of weeks now, I was very anti-TLT all through this session here. So everything from really January through probably 4 weeks ago is pretty much where I've said stay out of TLT, don't catch the falling knife. I have several videos on that. But once we came down, you get the bullish PSAR flip 3 weeks ago. You started this uptrending line here. MACD's been improving. RSI has been improving. We started nibbling in here. I would like to have seen a little bit more of a pullback. I wanted to see this initial burst, a pop back. We got a little bit more of a pop and then drop back to the 21 EMA. And then this touch on the 21 EMA yesterday was, I think, a really good sign that I think you could get long on some TLT. So I think it's still a good opportunity here. This gap up now, it's a little much right now. I don't think rates are going to zero anytime soon. So I can't see this thing going to, 140 or 120 sometimes. So probably not even 110 anytime soon. But I would say any dips to the 21-day moving average here would be an opportunity to get long on TLT. Taking a look at the futures quickly, good days, huge day up in the Aussie dollar, huge day up in the British pound, huge day in the Canadian dollar, and a huge day on the euro today. We won't cover all of those, but gigantic days with the dollar dropping. Bonds, nice little update today on the session. So pretty good update on the session. We actually had naked puts that we put on yesterday near the close, and we took them off at the open today for 50%. So we had 1 day 50% winners on bonds. Like I said, we have continued to sell bond puts for weeks now, and every pullback, like we just got yesterday to this 21 EMA, is, I think, a chance to get to sell some naked puts in bonds and just play it that way for now. I think that's great. Oil on the session. Oil had a tricky day today. Oil was up decently most of the session and just faded throughout the session as the markets went up and the dollar dropped. This continued to just drop off until it actually closed down slightly on the session. Now, MACD and RSI have been trying to improve for a couple sessions, but we're still in this downtrend overall. I think it gives you another opportunity. We've got naked puts in oil, and I think if we come back down here again, anything below this 78 line, another opportunity for us to sell some naked puts. If we look at volatility in oil, okay, it had moved up significantly on the session and then finished on the lows. So as the market was actually moving up in oil, volatility was increasing, and then that volatility came back out of oil. It's still a good volatility rank. I like oil volatility here. I still think the oil trade is a great trade. Naked puts, 112 trades. I think you can make really, really good money trading oil right now. And then gold, a good day on gold, had a decent rebound on the session today. MACD and RSI continue to improve here on the daily. And if we're looking at the weekly here on this particular trade, this is the GCG expiration, and a decent 1 day week so far, or 2 day week so far on gold. If we look at gold volatility, it dropped down, hit the 2 ATR, bounced off it a fraction on the session, but gold volatility has been dropping, which is really good for our strangles. We'll look at our portfolio in just a minute. So there's where we are on futures. Taking a look at the sectors today. Overall on sectors, semiconductors up 10.6%. Massive move. Semiconductors have run from 14 to 22. That's been the trade of the last couple of weeks. Semiconductors have been, in my opinion, the greatest trade. You're talking what, 8-point move from 14 to 22, 60% move up in just 2 weeks, maybe 3 weeks here on semis. Another 11% today. Regional banks gapping up. Big regional bank day today, helping the IWM as well. And then real estate, industrials, retail, all of them winners. Kind of middle of the pack. And it's bad to say that, because middle of the pack here on XLY, consumer discretionary, is still up 3.3%. But that's middle of the pack, was 3% on the session. Tech up 2%, down towards the bottom of the pack. Financials up almost 1.9%, bottom of the pack. And then communications down here. And finally, healthcare, the worst performing sector, only up 0.7% today. So everything green on the sectors. And if we take a look at some of the big names here, Google moved up on the session today, 1.4, or Apple did, 1.4%. Microsoft getting further overextended. So both Apple and Microsoft both overextended, and now you're getting overbought on RSI, weekly and daily on Microsoft. Amazon getting close to overbought. Meta getting close to overbought finally here. Google, another gap up. So we've now completed this gap. So the gap down from earnings completed on the move today. Now we left some gaps below, but the gap for earnings totally was filled by today. We filled that gap pretty nicely. Now we have a little bit of gap below here, but Google's been a great opportunity, moving up from a low of about 120 to about 135 in just 3 weeks. NVIDIA continuing to power itself higher, up another 2%. Definitely getting overbought. Everything here, if you're looking at the RSI numbers over here on the daily charts, every one of them starting to get that little red tail, except for Google. But even Meta starting to get a little bit of that red overbought. Tesla, not quite there yet, but Tesla trying to fill this gap, trying to do it quickly. So trying to fill this gap. Big gap up today. Tesla up 6.12%. Big move on Tesla on the session. Not overbought either. So there's room for Tesla to run a little bit more. Let's take a look at our account and see where we were on the session. So overall day today on the move up, Delta dropped 1.4 or 142, which is 0.04%. Extraordinarily Delta neutral. We are absolutely Delta neutral. Slightly positive, but pretty much Delta neutral as far as percentage goes. Love it. Theta dropped a bit today, 941, which is 0.29. Makes a little sense now that VIX is dropping all the way back down. So volatility was up, and now that all that volatility has come back out, and now our theta is back to the 3 handle, actually a 2 handle here, but really 0.3%. Not terrible. Still decent theta, but that volatility coming out made a big deal. We dropped slightly in net lick today, down about 1,000 points, mainly because the 112 trades gave up some gains that we had on the put debit spread there. The naked puts doing just fine. Put debit spreads causing us to lose a little bit on the net lick. So buying power here dropped again, 170, which is 52%, perfectly in line with our goal, 50% buying power. That gives us the green light that anything we're taking off, we can start to add. We did manage to add another $2,577 in winnings today, taking our monthly realized gains up over $20,000 to $21,583. We are now up almost 7% on the month. It's now the largest monthly realized P&L of the year. So if we look at all of our P&Ls for the year, January was the highest at 20,000. We're now at 21. If we can stay there, that'll be the best month here in November. So doing fantastic. We're up $95,919 in realized gains this year on an account we started the year with at $250,000. So if you look at the realized gains as a percentage, we are now up 38% on the year. So 38% on the year. How does that compare? Okay, on the year, so year to date, 17% on SPY. So SPY is up 17.8%, and in our account, we are up 38%. So almost a double, actually more than a double. We are up more than a double on SPY right now, which is fantastic. So up more than a double on SPY. So doing great. Overall, accounts up from a net lick standpoint, 2.21%. We are 1% away from a new all-time high. So doing really, really well. Where do we make another $2,577 this month? Here's what it is. So here's the ZB trade one day. So we put it on yesterday, sold a naked put, the 106 for 22, and took it off at 11 ticks today. So exactly a 50% winner, 8.4% return on margin in one day. And then we also closed the naked puts on one of our long-term 112s. We now closed the December 15th long-term 112 naked puts, leaving the PDS running, but we closed the naked puts for $1.10 today. I doubled that for the 2 quantity, and that means we've locked in on this entire trade 92% winner. No matter what the put debit spread does, it's a 92% winner, and it is a 20% winner in 90 days in the trade. With a put debit spread still working, they could take us up over 20%. But our goal typically on these is 20% in 120 days. We got there in 90. So 20% return in 90 days, not too shabby. You can go ahead and annualize that thing, but that's a pretty nice percentage on an annual basis. So if you're making 20%, I'm thinking every 4 months is what I want to make 20%. I did it in 3 here on this long-term 112 trade. So fantastic, good stuff here. And that still keeps us a handful on. So we still have a bunch of long-term 112 trades still working. So we have some new ones on. So good stuff. Let's take a quick look. I will share my portfolio with you guys as well. We'll do a quick wrap and a run through the portfolio. Here's where we are on the session. P&L right now down just fractionally, mainly because of some after hours stuff here. But taking a quick look at the trades, we've got a 112 on in oil. We've got a strangle on in oil. That strangle's up 27%. This 112 trades up 70%. We've got 3 naked puts. One's up, 2 are down. We're just letting those things ride. Got another 112 that's just down fractionally. We've only been in 11 days, and we on the down move here. And then we've got another strangle. We've been in for only 8 days. It's down just fractionally. So kind of mixed, mixed stuff. If you look at the P&L since the open, we're up positively on oil. You can see we are up massively on our ES trades. Take a look at what we got on. In fact, let's go to the more recent stuff. We've got only the put debit spread left, which is a converted naked put into a out of the money put debit spread on a FB 112. We've got a standard 112 trade. Just the put debit spreads are left on that. We've got, and these P&Ls don't make any sense anyway, because you're taking trades off and on, rolling and so forth. You got the BA 112, it's up 86%. You got this December 15th long-term 112, which is the one we closed the naked puts on today. So now we got a free put debit spread on this thing to wreak some havoc with if the markets drop. We've got a December 29th long-term 112, where we've tweaked the put debit spreads and already taken profit out of it. We have another FB, the Fat Bastard 112. That's 11 days old. We got another Fat Bastard 112 trade on. We just put on today. So on this move up, I'm hedging myself a bit with some of these Fat Bastard trades. Excuse that if you don't like the term, but I think it fits these trades. Then long-term 112s here. The naked puts on the January 19th are at 75%. 75% in 54 days. Remember, we're looking at 120 days to get to 90, 95%. I could probably be taking these off as well. We've been working on that with our members, when to take the naked puts off. How early is too early? What do you need to factor in? When can you take the naked puts off? So we've got an entire training and discussions we're doing around how to manage the naked puts on the 112 and when to take them off. When's too early? When's too late? When can you take them off? Another 112 for January 31st, 72 on the naked puts. Here's a strangle. That's down a bit right now on this move up. We've got another long-term 112 February 16th, 71% on the naked puts in 22 days on that one. Another strangle here, down just a fraction on this move up. And then we've got another long-term 112. Those naked puts are up 45% in 12 days. And then you've got this March 15th one, which is the most recent one we put on yesterday. These naked puts are up 20% in 1 day. Fantastic. We love this trade. We're doing great and really working with our members on how to take these off, how to stack them, okay, how to build stacks on your ES outside of the standard practices that we do, when to take the naked puts off, when to adjust the PDS. You can also adjust the naked puts as well. We have some tricks for that that we've been doing. And then gold. Here's our two strangles in gold. This one's up 45%. This one's up 2% in 8 days. So 3% roughly in 8 days. Still moving here. So we're getting ready to get one of those taken off. In copper, we got a 112 trade on. This thing's up 87% in 30 days. And then we're sitting on, we're back in bill. We're back in the T-bills here. We've got $100,000 worth of T-bills on, using about $25,000 in cash. We're expecting about a 0.4% return or so on these for the month. So we should make $450 on bill in about 15, 16 days. So that'll be nice. $400 on bill using $25,000 in margin is a 1.6% monthly return, which at the end of the year is roughly a 20% return on bill. All right, so there's our account. You got a chance to see what it looks like in there. But overall, fantastic day, closing another 2,577. We're now up again, 21,583 on the month, having our best month ever so far. It's not over. Okay, we're not even at the halfway point. The halfway point is tomorrow. So we continue to move forward on these, and we're up 6.7% on the month. Let's see if we can get this thing up, $25,000, $30,000 on the month. Very possible. I mean, we could technically close out all of our naked puts now and probably bank another 20,000 for the month, but that would make things a little bit more insane. There is a method to our madness as to when we take them off and how we take them off. But I would expect that you will see more naked puts coming off, or you'll see some adjustments being made to bank some of the profits in the naked puts. We have a few other things that we do besides just peeling off both of them. So if you want to find out how we adjust these 112 trades, how we're putting on these 112 trades, come and join us in the Discord. If you like this video, please click the like button. As always, Please like it. Go ahead and subscribe if you're not a subscriber. If you are not in the Discord, trust me, get into the Discord here. Catch up with these, catch up with the members that are doing fantastic in here. There's some great people doing some fantastic things, making a ton of great money in here in short periods of time. So these members are doing great, and you can do the same. So come and join us in the Discord. Find out how they're doing. What are we doing? Find out how we're doing the 1122 trades as well now for some of the different sized accounts. And then you're really going to want to see what we're doing on the tiered 112. Fantastic trade. Something brand new that's coming. I've got a tiered FB 112. You're going to see that thing coming up here as well. I think you're going to love that trade, but you got to be in the Discord to get it. All right, everybody have a great rest of your evening. We'll see you tomorrow. Be safe out there. Take care, everybody. Bye-bye.